In today's session, we are seeing that the dollar index is taking the turn on the downside. The bears are looking increasingly in control, and as you can see from the title, that is the mood which we are observing in the market. And I think that in next couple of sessions also, the bearish sentiments are likely to prevail, and that's why in today's session of Market Mover, we will see if there are any emerging opportunities for us to exploit these changing dynamics to our advantage. If we consider the data docket for the day, earlier in the day we got retail sales numbers for the euro area for the month of August, and here the retail prints are actually better than the expectations, and both in terms of month on month as well as year on year, the numbers are quite strong, and this is actually happening because more and more economies in the euro areas have opened up for the business, and that is being now seen in the rising, the growing retail sales. The month on month numbers stand at 4.4% growth, and in terms of year on year, the growth is still robust at 3.7%, and this is actually the highest growth rate in terms of yearly for last 2 to 3 years. I'm not precise here. Moving on to the North American trading session, just a while back we got the ISM non-manufacturing PMI numbers, and here the PMI is better than the expectations for the month of September. And if we see the components, non-manufacturing prices, non-manufacturing new orders, these components are also showing robust growth, and here I think this is happening as we are seeing the rebound in consumer sentiments, and people are going out more and are willing to spend on services, and as a result of that we are seeing the non-manufacturing PMI doing well for the month of September. Now let's shift our attention to the technical aspects of dollar index first, and then we will also see the euro USD. Let's start with the dollar index technical outlook. This is the daily time frame chart, and here not long back the bearishness was the order of the day for the dollar index, but then after making a solid base around 92, we were observing this rebound in the dollar index, but it increasingly looks like those sentiments are fading, and this decline which started close to 95 is extending, and in today's session we are seeing further acceleration of this downward trend, and now from short to medium term perspective also things are again increasingly looking bearish, and I feel it is going to be prudent to look for the selling opportunities in the dollar index. And if we consider the pivot point series as well as the regression curve, not long back these indicators were pointing to the growth, the rise in the dollar index, but now as things have changed and as the price action has dived on the lower side, we will see that both these technical indicators taking the turn for the bearishness, and here if we consider the central pivot point which stands at 93.48, it is likely to be breached, and if we see fresh break and then sustenance of that break below this important level, then I think more and more reasons will be there for these bearish sentiments to take hold, and if you consider the price action is now concentrated in the lower half of this regression curve which was steeply bent on the upside, we can expect the flattening of this regression curve, and eventually after next couple of sessions, if the price action doesn't turn on the upside, we can pretty much expect the turn on the downside for the regression curve, and then both these indicators will be pointing to the south. And in such scenarios, if we are going to go for the fresh trading opportunities, I think we have to utilize these 50 and 100 SMA zone around 94 as our deciding marker, the price zone to watch out for, and I feel this immediate prior swing high which is there around 94.10 can be utilized as our stop loss zone. So in today's session, go for any trading opportunity closer to this immediate swing high, the day's high, closer to this 50 SMA area. But let's also look farther moved from the current price zone, as we have seen this accelerated selling pressure which has taken the dollar index below 93.5. So I feel that if we are going to look out for the optimum entry point, which will provide us the better risk reward ratio, then I think we will have to sit on the sidelines and see if the move on the higher side, at least some sort of retracement. If that happens, only then, as long as the price action is well within this resistance zone of 50 and 100 SMA confluence, we can be confident about going in for the fresh short sell trades while keeping the stop loss just little above this 200 SMA, which is there around 94.13. And that means the taking the risk of around 30 to 40 pips, but in lieu of that we will be targeting the 93 zone, and naturally our risk reward ratio will be almost 1 is to 2. Now let's shift our attention to the Euro USD. Euro USD, you can say that it is the inverted image of the dollar index, and here, as the dollar index breaking on the lower side, we are seeing the likelihood of fresh breakout in the Euro USD. For last couple of sessions, the Euro USD was holding well above 1.17, and in today's session, that consolidation phase is now giving way to fresh break on the upside. If you consider the price trajectory, the bullish sentiments have been all there for last couple of months, and here this time around we saw this correction happening, which eventually took the Euro USD closer to the 50% of Fibonacci retracement of its rally, starting closer to 1.12 to 1.2, and now after this consolidation we are again seeing the rejuvenation of the bull run, and in such scenarios it will be important for us to watch out for the immediate resistance zone. Here we have this central pivot point around 1.178, which is likely to prove a hurdle for the continued rise of the Euro USD in today's session. So let's see how things shape up, and if we see the close price zone, price level of today's session, if that is above this central pivot point, I think it will mark the change of dynamics in the Euro USD, and from being in the bearish territory we can think of Euro USD now entering into the bullish territory, and consequently we can look for fresh trades on the long side. The regression curve is still, of course, on the lower side and pointing south, but as the price action has shifted upwards, we can pretty much expect the flattening of the regression curve in due course of time. Coming to the hourly chart to see if there are any emerging opportunities to get involved in today's session. I think if you are fortunate enough to notice the formation in the morning, well and good, you might be sitting on good amount of profit by now. But if you are looking for the fresh trade right now, I feel it is going to be fairly difficult to get the optimum entry and exit points. The move has already happened, because of which we will need to be a bit cautious while making the entry on the current levels. Here we have these price levels of 1.17 as our immediate support zone. We saw the Euro USD consolidating and holding well above this immediate support area of 1.17. We also have the 200 SMA level closer to the 1.17, and in such scenario we can count on this price zone to act as the near term support for the Euro USD, and I think unless and until we see the fresh break below these prior swing lows, we can be pretty much confident of the possibility of Euro USD moving on the higher side while continuing its run, the bull run. and in such a scenario we will have to go for the buy trade. And if we are going to go for the buy trade, I would say that we should be looking for this confluence zone of 50 and 100 SMA. And if we see some sort of correction happening, and if the price action is holding well above this confluence SMA zone, we can be fairly confident for going for a new trade in the Euro USD, while keeping the stop loss just little below this immediate swing low. So here, while keeping the stop losses below 200 SMA, we can target the entry closer to this confluence zone of 50 and 100 SMA. And as is our style, as is our setup requirement, we go for the risk reward ratio of at least 1 is to 2. And if you are keeping the stop loss of around 40 pips, you will need to watch out for at least the target price of 80 pips. And in a scenario, if we are getting involved anywhere close to the price band of 1.172 to 1.173, we will be targeting on the higher side the price levels of 1.18, which are increasingly in sight. And even if these 1.1 levels are breached today, we can expect some retracement to happen, and then in due course of time the momentum might push the Euro USD even beyond 1.18. So that's it from my side for today's session. If any of you have any query or any idea to share, you can write it in the comment section, and I would be more than happy to take the discussion forward. Before I sign off, I would also like to remind of the risk associated with trading in the financial instrument, and one should be careful while using the information provided. Have a fabulous day ahead. Goodbye.